Welcome everyone. Thank you for joining us for today's webinar. My name is Shivam and I am from ThreadSol. We are the world's fastest growing tech company in apparel space. So today we are presenting Apparel Sourcing in a Dynamic World, Pathway for Emerging Countries, which is brought to you by Mausumi Ambasta's Stitch Diary, an educational blog in the field of apparel manufacturing. Now, if you like to read about the apparel and fashion industry in news or on the internet, you would know that there is a lot of talking about the emerging markets in this field. Now, if we talk of emerging markets have proved to be a dynamic growth opportunity and also offered companies the potential to diversify their revenue stream, reduce reliance on sales in a particular country or region. Just a little housekeeping before we get started. Attendees, if you have any questions regarding the presentation, please type them into the question box. There's a blue colored bar on the right side. You can see that's the webinar control panel. So I'll bring them up at the end when we start the audience interaction. Also, this session is being recorded and we will be sending you that. In case you've missed something, you can reply and watch it again. So now, without further ado, let me introduce you to our panelists for today. We have two guest speakers for today's session who have immense experience and knowledge about the global apparel industry. Our first speaker is Mr. Anas Shakil. He is the senior partner and head of emerging geographies for ThreadSol. Anas is an industry expert with a core understanding of the apparel supply chain, leading key initiatives with retail chains, brands, and manufacturers. Previously, he's worked in setting up manufacturing units in South Asia for an American-based fashion retailer. Welcome, Anas.
Thanks, Shiva.
Our second speaker is Mr. Varun. He is the Associate Director at Wazir Advisors. Wazir Advisors is a business consulting firm serving the Indian businesses. Mr. Vaid has been a part of this industry for last 17 years with immense experience in consulting. Welcome, Mr. Varun.
Thank you, Shivam. Hi, everyone.
So before we proceed with the webinar, I would like to put forward the flow of discussion to you all, the attendees. Mr. Anas and Mr. Varun will be discussing about the countries that are emerging as prominent garment manufacturing destinations. So we know about all the countries that are big players in the field of apparel manufacturing, right? There's China, there's Bangladesh, Vietnam, Italy, India, Indonesia, etc. There are many. But on the other side, there's a picture where we have the emerging countries, where we have all the emerging countries. If we talk of the African region, Eastern African region, or Southeast Asian region. So the countries which we are going to target in this webinar are Ethiopia, Kenya, Myanmar, and Cambodia. We will be discussing the barriers to their growth and the best way possible for these countries to emerge as future garment manufacturing hubs. So without wasting any time, let's start off with the webinar. I would like Mr. Varun to throw some light on the topic. Over to you, Varun.
Thank you, Shivam. So, like we were discussing today about the emerging markets, not emerging markets, exporters in the garment manufacturing today. So, I'd like to begin this discussion by just going back into the historical timeline and talking about why are the countries which are large today have become so. So if you look at the history of garment as well as textile manufacturing, it started from the main European ground where the Industrial Revolution started. So it was perhaps the first industry which got into which actually brought the Industrial Revolution. And then from there, the manufacturing always moved outwards. It went to the USA, then went into continental Europe, and then from there it migrated to different parts of the world. Since 1980s or something, China has taken a big mammoth share of the world's manufacturing and exports in garments. And today also it has a share of about 38 to 39% of the overall garment exports. So till 1980s, 90s, these were the countries which were manufacturing a lot. But then again, there was a second round of spillover, the restructuring again happened. And then there were countries like Vietnam and Bangladesh which started growing by the turn of this century when the multi-fiber agreement ended. And so as of now, we stand in 2018, the data, whatever is available, shows that first of all, the largest exporter in manufacture is China. The second is Bangladesh, but there is a huge gap. If we are talking of 150 plus billion plus exports of China, Bangladesh is second number, but it is only exporting $32 billion. But still, in last 17 years only, it has reached from 1 billion to 30 billion. So this has been the trajectory of growth of global apparel business, how it has happened over. So this is the first part of migration, what has happened so far. So our discussion today starts from this point, that what will happen in the future. What are your opinion? What is your opinion on us? Do you think we are in the discussing the right line?
Right. Yeah. I think you were bang on target, but I would like to add a few interesting data points so that we can have a look at the complete picture. If you look at what has been happening over the last 2-3 odd years, if you ignore the last 20-25 years, just look at the last 2-3 years, you will see that the fashion industry has seen a tectonic shift, right? There's a lot of change which is being driven by external factors like e-commerce, retail trends, so on and so forth, right? So if you look at these trends which have come in, they would probably give us a very strong insight into where the industry is headed, or the sourcing caravan as we speak, which would probably give us a very strong understanding of how these emerging markets would be able to take over the change which is coming, right? So if you look at the retail market right now, it being the driving force, the focus for these brands in terms of sourcing has actually diversified from cost alone to cost and speed to market. There are two actual factors
Exactly.
which are driving their search for looking for destinations to source apparel from, right? Which has brought on a very strong reaction from the brands in terms of diversification, which means earlier when they were just looking for cheap destinations to manufacture, now they're also looking for destinations where they have the benefit of speed to market. So just a reference point would be like, for cost, they might still look at Bangladesh over a certain range of products, but speed to market, they might look at Vietnam, they might look at Africa for nearshore destinations, so on and so forth, right? Which puts a very interesting thought in place, which I think we should take forward, is these emerging markets which are coming up, we should look at a perspective of not just cost of manufacturing, but also in terms of speed, efficiencies, and outputs, which is what the brands need to look at, because the retail trends demand this. Otherwise, ultimately, they might think of shifting from Bangladesh and Vietnam to, let's say, Ethiopia, Myanmar, these places, but there'd be a lot of loss of market capitalization which would happen in their places because they're not ready for it yet. And you'll see how the economy is currently, right? So that's something which cannot be sustained, right? I think this is something that we should pick out from, which we should look and understand that these new emerging markets, like Shivam said, Ethiopia, Myanmar, Kenya, Cambodia, how well are they geared to actually take on the volume which will have to move to their manufacturing setups, B, whether they're geared to handle the requirements of the retail and fashion world, right? That's where I would actually like to hear your points on this one.
Yeah. So Anas, actually, if we again, when we talk of any potential country in the export apparel export segment, so again we have to understand, as you said, like one is the cost aspect, other is the speed to market. So if you break down these two parameters into sub parameters, and if we just go back again to the countries which are there in the top 10 list today, let's say for example China. What is the success factor of China? What is the success factor of Bangladesh? So let's talk about China. China, one point in time, was one of the most cost efficient destination, whether it was due to state subsidies or low wage costs, but overall it was a low cost manufacturing destination. This is perhaps the it is not perhaps, it is the only large exporter of garment which does not have any duty free access to any other major market. These three major markets, like if we're talking about Europe and USA, it doesn't have the duty free access. So it capitalized earlier initiative on the low cost, but then it's gradually built up on the capacities, the scales, the economies of scale, etc. came into play, and then it was able to capitalize on those things. If you look at Bangladesh, Bangladesh again has also got good capacities nowadays. In last 10 years, it has done fantabulous job. But the other advantage that it has the duty-free access to Europe. So that is one of the advantages which helped it to become a larger manufacturer. Plus, of course, the low cost of manufacturing was always there. Now, taking you from this thing, if we talk about the new countries which are emerging, let's say Ethiopia or Cambodia, whether they are emerging or not, let's try to put a check mark against all these, what do you say, the kind of success factors. So Ethiopia, if we talk about, Ethiopia has virtually duty-free access to entire world. It has duty-free access to USA under AGOA. It has duty-free access to Europe under EPA. It has duty-free access to many other countries because it's an LDC. Same is true with Cambodia also, that it has got a huge duty-free advantage. If we just to understand what is the duty-free advantage means, like for example, if a garment exporter from India is shipping a synthetic garment to US, so the effective duty what will be applicable would be in the range of 30 to 32%. On the contrary, if you are shipping it out from Ethiopia, there will be a zero duty. So that 32 percentage duty gap comes into the play. So this is one thing. So, and on top of it, the low cost manufacturing, the wages, etc. These countries are not heavily industrialized. These countries are comparatively having a low wage cost structure. The government is also supporting a lot. So one is that they are low cost manufacturing destination. Other is they have this duty free access. The main issue, like how you highlighted, is the speed to the market. That is perhaps the biggest challenge if we talk about African countries or if we talk about the other countries also. While all said and done, Africa is kind of closer to US and EU, but the transportation and logistics is a big challenge over there. What is said that in the sea, if a vessel is coming from China to, let's say, a port in Kenya in Mombasa, it will take lesser time for consignment to reach from China to Mombasa, but from Mombasa up to Nairobi through road, it will take more time. So the logistics, etc., are sometimes not up to the mark for shipping to the even to Europe or US. So that is perhaps the biggest challenge which is there. In the genetically speaking, the countries are having low cost manufacturing destination. They have duty free access also, but this is the going to be the key distinguishing factor whether they will be able to supply to the buyers on a kind of a timely delivery schedule what they require. So that is going to be the biggest challenge for these countries. If we look at in comparison, if we look at India, India has a very different kind of a structure where our domestic market is also huge. If you're not able to export, or if we don't, our exports are not that great, so we can still manage with our domestic market. But these countries don't have that kind of a capacity of expenditure as in the domestic market. So these countries are, whatever the businesses will be export oriented only, and that is the focus that they have to bring in to cater to those markets.
That's a very interesting picture you paint. Completely agree with you, Varun. See, what is happening is another point which I would like to add over here is, when I was talking about diversification, I see this very interesting trend coming in terms of where brands are trying to source from as many countries as possible and diversifying the kind of products that they're sourcing. Like for example, if they're doing basic products where they want to look for low cost, for them something like probably Bangladesh and Ethiopia would be Bangladesh now and Ethiopia the future, right? But when they head towards looking at something where they're focusing on either speed to market or efficiencies and doing complicated products, they might look for markets like Vietnam, for example, right? Which is exactly as how I see this picture developing. So I don't see that the business would go away from geographies like Bangladesh and Vietnam. What I see is that they will evolve one step ahead of the whole game, and the low cost business would move to these emerging markets, right? Like for example, China. The question that the point that you highlighted, that's a very interesting thing to note. China has a huge internal consumption of apparel, right? So it always has the benefit that even though that as of now, earlier it didn't, I completely agree, but over the last 5 to 8 years, its internal consumption is gigantic, which puts it in a position that even though it might not have duty-free access, its internal consumption can handle and provide business for a big percentage of its manufacturing setups, right? Plus, also China has another advantage with the areas like Myanmar and Vietnam, where it's easier and cost-effective for it to actually move its manufacturing facilities, right? So that's where, if you look at these two new markets, look at Myanmar at one hand and Ethiopia at one hand.
Exactly.
If you actually filter down product-wise, you will see a lot of business of coats and jackets moving to perhaps Myanmar rather than Ethiopia. Whereas Ethiopia would get a lot of these low-cost products like basic t-shirts, bottoms, which will move into Ethiopia, which will actually come in from Bangladesh to Ethiopia, and Bangladesh will move up the chain of doing more complicated denim washes, doing more complicated intimate apparels, jackets, suits, that kind of stuff, right? So I like the fancy term emerging markets, but see, if you compare it to like 10, 15 years back, Ethiopia and Myanmar would probably come up, and Cambodia would come up, but no one would be the loser here, right? Bangladesh would still stay in position for easily next 10, 15, 20 years. Vietnam easily the next 2 decades. Whereas some of the low-cost products, which even today manufacturing in Bangladesh would be getting expensive, they will move into Ethiopia. They'll probably move into Myanmar and places like this. But I've got an interesting question for you, which I'd really like to hear from you on. Which one do you think is better geared to handle this inflow of business? Would it be Ethiopia or perhaps Myanmar? What do you think?
See, I'll tell you. While a lot of things are being discussed about Ethiopia as the next Bangladesh, also it is being termed as the Bangladesh for Africa and everything. Uh, I'll just give you one very different picture on it. So, like Africa, the entire sub-Saharan Africa, let's say 45, 50 odd countries, they have this duty-free access to Europe, US since last 10 years, and it is there till 2025. The combined export of apparel from country these SSA sub-Saharan Africa is about $1 billion. On the contrary, Myanmar, when it was under the sanction of US, even then at that point in time, its export was almost like $1 billion. You can very well judge how much the difference is there. Myanmar, despite having all the challenges, was still able to supply almost equal volume than the entire African countries. So as of now, if you look at it, Ethiopia is still developing. There is a lot of things which are happening on a very right direction. Government is putting up industrial parks, huge industrial parks, very well established parks. A lot of Indian manufacturers have set up their shop over there, Arvind, Raymond, etc. But still, it's few years away. It is on the right path, but the development will have happen eventually. Maybe after 2020, it will start acceleration. The business will start acceleration. There is no doubt about it. And in one sense, if you see, these countries are not competitors. There's a lot of restructuring which is going on. China is focusing on domestic markets. It is also investing in Ethiopia. It is also investing in Myanmar, Vietnam, and all those countries. So it's a restructuring only. There is a market for everyone. They're not competing. But the only thing is that Myanmar looks a bit ahead. The major challenge for them in the Southeast Asia is more of the political stability, on which Ethiopia fares better as of now. The political stability and the social stability in Ethiopia is much better than the other Eastern African countries compared to those countries as well. But as of now, Ethiopia is still developing, while Myanmar looks a better bet as of now. And Cambodia, again, Cambodia is much larger exporter. Even today, it is doing somewhere in excess of $7 billion of exports. Ethiopia is a very minuscule player in garments. It is not even $100 million if we talk about it. Kenya looks to be a good potential market, exporter of the garments. It has been the largest exporter of garments to US under AGOA for last 3-4 years. But again, the export values are only like $400 million per annum. So the growth potential is there in all the four countries. The volumes in Southeast Asian countries are much higher even today than compared to Africa.
I would agree to all of that. However, the only thing which I think Ethiopia has the benefit on is it has the advantage of brands investing there, brands committing business there, and brands supporting backward linkages as well, which means that they're trying to look at building a whole new supply chain in Africa, which I can completely agree will not happen now. It'll take another 5 to 10 years to even become sizable. But then that's the market for the future because it's being looked at in a wholesome manner. Like Ethiopia, there was very interesting. I was back in an event last year in one of the Source Africa events where they were talking about how they're investing into cotton farming because they want to take that to yarn to fabric, right? So they have the whole picture in mind where they're looking at a complete backward integration as well. Whereas a country like Cambodia or Myanmar would be heavily dependent on its political relationship with players like China, because end of the day, a lot of it is also controlled by the politics and the relations that nations hold, right? The geopolitical gameplay, which is where I think that for example, for filling the gap right now, Cambodia would be a very good destination for the next 5 to 8 years. But ultimately, the breakaway would happen towards Africa, because also for a very simple reason. If I just go back to basics and look at cost, right? If you just look at cost, even Africa has a huge advantage, not just on the cost manner, but also they have a huge working age population which they can use, right? Which is where Cambodia lacks right now. Plus, even infrastructure wise, I would still say that Ethiopia is somewhat better than Cambodia. in terms of the roads and all of that. Kenya, yes, it needs help, but Ethiopia also, because it has friendly relationships around stable government who is keenly focused to develop this industry, right? Which is where I would put my money on Ethiopia somewhere down the line, right? But another very interesting question that pops up in my mind when you think about this is, Cambodia would grow, but at the behest of Vietnam, which means that Vietnam would have to lose a little business for Cambodia to grow. Because if you look at the kind of products what Cambodia and Vietnam are doing, they're actually doing the same kind of products, bidding for the same kind of orders, which earlier were happening in perhaps Indonesia and China, right? So for Cambodia to grow, a lot of business will also have to move away from Vietnam and Indonesia into Cambodia. That's another factor which I don't see happening right now. But that's completely my point.
No, you're right in that sense. If you compare all the four countries, which is the better bet in the future, long-term future, it looks like to be Ethiopia, no doubt about it. The key aspect here is like what Bangladesh is doing these days. There is a difference in the extent of doing it, but just Bangladesh, what is happening in what we are seeing is if you look at the textile machinery shipment statistics to Bangladesh, the shipment of spindles, I mean to say the yarn manufacturing machineries, as well as fabric manufacturing machinery, has been continuously increasing in Bangladesh. So what is happening is that Bangladesh, after reaching $30 billion of exports in garments, now is backward integrating into fabric and spindles on a very large scale. So now they are backward integrating. Ethiopia has approached a very different kind of a thing. What they are doing is they are trying to put up, as you highlighted, the integrated structures. So their textile parks, their industrial parks, what they are having is they are proactively inviting international investors from China, India, Bangladesh also, to put up the textiles as well as garment units. They could be different. Even Turkish people have invested a lot in the yarn segment in Ethiopia. They are some of them are weaving or knitting over there. Some are taking yarn back directly into Turkey also. So Turkey, like Ethiopia, this is one part that they have taken. They have done the right thing, that they are looking into investment across the value chain. The other part is the infrastructure. Now, if you compare just their adjoining neighbor, let's say Kenya and Ethiopia, Kenya, I would say, is a better overall in terms of the across. If we compare the across the country, the infrastructure is better in Kenya as of now. But what has happened in recently in Ethiopia, they have just started their rail line. Broadway line has started from the port of Djibouti to Addis Ababa and all major stops in between. So that is going to be a huge plus point for them. On a similar line, Kenya has also started from Mombasa to Nairobi. They have also started the railway line. It was not existing earlier. So now what is happening is that the shipment from the manufacturing the point which is Addis Ababa, near there are so many industrial zones over there, up to the port has become quite fast. They have also developed a very I would say a very nice highway with the help of Chinese. Both countries are doing it. So the focus of Ethiopia is kind of advanced. They are understanding that we will ultimately require a textile value chain also. So they are investing in those direction. They understand that infrastructure has to be prim and proper if they want to cater to those kind of fast fashion brands or even basic brands also. So that is the difference in approach of Ethiopian growth model vis-a-vis the other countries. So Ethiopia definitely has the large potential, but as the number speaks, the total export out of the country is not even $100 million as of now. So whosoever is going there is kind of a first mover over there. They can become a part of the growth story. There is enough steam within Ethiopia with the low cost wages. The wages we can't even imagine. Like the wages when they started, it was $30 to $40 per month, which is like one fourth of not one fourth, let's say one third of Bangladesh. Now it has grown up to $60 to $80. Some are paying $80, some are paying $60. The power cost, if we talk about, is only 4 cents, and some are even getting at 3 cents. So 3 cents is like 2 rupees in Indian terms. So that is almost like negligible. For textile industries, power is very important. For garment industries, wages are very important. Those are very low over there. So this is a government commitment over there, that you come here, you make cost efficient and export it, because they are in need of export foreign currency. They are in need of employment generation. So they have identified it, and they are following a very right model. So Cambodia and Vietnam, all these are, as you said that they are also dependent a lot on their neighboring country of China for business to come. So they are kind of being directed by that manner. So that is the thing. But maybe next 10 years down the line, something will change. But as of now, Ethiopia definitely has got a lot of potential in it for the government, specifically for the government export, because the right policy direction, I would say.
Fair point. when you look at Kenya and Ethiopia, for example, together, Kenya has also the unfettered advantage of having high skill and efficiency levels as compared to Ethiopia,
Exactly.
right? What do you think Ethiopia needs to do to actually work on this? Because this has been raised by a lot of brands, a lot of critiques, that this is something where Ethiopia is going to fall flat if they don't solve this problem. What do you think they need to do in that direction?
I think you've got a very pertinent point. This is perhaps the biggest challenge. There is another challenge also, which we can maybe discuss later on. But this skill and efficiency requirement in the workers over there is a big challenge. People who have invested from India are even taking a lot of workers from India to start the manufacturing units in the initial stages. There is a lot of challenge retaining and recruiting and training the Ethiopian workforce as of now. The thing is that the country was not an industrialized country. We have to understand that first of all. The people, the general people who are there, they're not aware about the industrialization. How do you work in shifts? How do you, what is efficiency? Why is it required? What will happen if you are not? So this kind of awareness is not pretty much available with all the people across the country. So now the things are starting to gear up. People are coming in. They're telling how to work in a industrial sometimes when I go and hi to each other, and for 30 minutes they won't even sit on their seats. So this kind of thing is there, but it's a general kind of a tendency of people who are not aware to do this. So what has happened in Ethiopia again has taken a due cognizance of this, and they have started TVETs, what they call it, the skill development centers, basically we can call. So there are associations like ETID and other so the government bodies are there which are investing into skill development. They are also bringing in international consultants for capacity building of their local companies. One is that the investors are coming from outside. For example, if a Chinese is coming or if Indian is coming, they would be aware of the best practices. They would be aware of how to train the people. But there are a lot of local manufacturers also who are looking to be export ready. So what government is doing is that they are bringing in international consultants for capacity building of those kind of companies. So skill development, private company, or it is done by government agencies or whatever. So skill development is one thing that has to be the focus of government in future. And even whosoever is going from India or China, this investor will also see that most of its time in initial phase of the project will go on the training, retaining of workers and staff member over there.
Yeah, when you say this point, I'd be happy if you throw some light on the comparison of labor as we see in Eastern African region and as we see in the Southeast Asian region.
So let me just tell you, like for example, if we talk about efficiency in Bangladesh, I'm talking of garment manufacturing efficiency. So we could be as high as 60 to 65%. There are different standards, so we go by the standard that 60-65% is the efficiency in Bangladesh. So in comparison, the manufacturing efficiency, if you are able to calculate in Ethiopia, it will be as at low as 25 to 30% even. So the gap, while the wage cost is only 1/3, the efficiency gap narrows down that margin. So if you're looking for an investor from Bangladesh goes to Ethiopia, you will find that the manufacturing is not very cost efficient and everything. But in comparison, if you look at the investor coming from Turkey, let's say, where the wages are already on a very high level, they could be as high as 8 to 10 times than in Ethiopia or in Bangladesh. If you talk about, so to him the margin would look still decent. So that has happened. That is why the people from Turkey were in the initial phases when there was a lot of wastages in the there was not of people were not aware about the efficiency, etc. A lot of Turkish people invested. It is only now that Indians and Chinese have started investing into the country, where they're already reached to a certain level of it. There is a certain workforce which is available at certain efficiency levels. So that is happening. So Ethiopia on that part has a big challenge. Kenya is a better advanced country in terms of this thing, because the buyers have been there for long. Whatever the business they were doing for last 10 years, it has been continuously doing $200-300 million of exports. Now it is about $400 million of export. So there is a workforce, there is a pool of workforce which are aware about the systems and processes, which are aware about the manufacturing systems of garment exports. So that is already there. If you compare again with the Southeast Asian countries, when Chinese people came, they came in with their own set of skill development and training programs, how to train the people. So now it's a story that the thing is that Ethiopia started doing it about 10 years later. So that's a gap. Ethiopia is catching up fast. Maybe it will catch up in the next 5 years. But as of now, there is certain gap.
So we've received a lot of questions by the time we were having the discussion. So I can take one question. So Ankita Saxena asked that what about sustainability angle? Where all brands have sustainability goals to cater in 2020 or 2025?
See, the thing is that sustainability is no more an option. Whosoever, when we are talking of a brand investing in the value chain in the country, the first and foremost thing is what their focus is on sustainability. We have seen a lot of issues there in Bangladesh in the earlier part of, let's say, about 5 years ago also. So now brands are very conscious about it. Even if somebody is H&M or C&A, they are moving into Ethiopia. The first and foremost thing on their mind is sustainability. There is no option for them but to invest in sustainability. Take the exporters; they are in line with their whatever the aims and ambitions they have for 2020. So this is a good part that the brands, when they are coming into the newer domains, they are focusing on that. Plus, on the top of it, if we looking at these countries, a lot of international investments are happening. International investment on the manufacturing side, with or without brand also. Let's say Arvind is investing into Ethiopia, has already invested into Ethiopia. So now whatever Arvind model is following in India to cater to the brands which are compliance conscious, etc., the same model they have to follow because the buyers won't change. The buyers will do the same kind of audit. They will also require the same kind of compliance from the units wherever they are. They are buying from a brand, whether they are manufacturing in India, Ethiopia, Vietnam, wherever it is. So the compliance, etc., with the large brands, it's a prerequisite. You cannot just ignore those things.
Yeah, so we can say that sustainability has become a necessity if we look
It
from
is.
that
It is.
angle.
There's no other option. If you want to work with these kind of brands which have a very well stated ambition to be a sustainable kind of a brand image they want to project, so there is no option, but you have to be sustainable.
That's a very interesting question there, because if you look at how the industry has moved, now sustainability is taken for granted, which means that when these manufacturers start from the word go, everything is being set up in terms of infrastructure, worker safety, and all of those parameters, keeping sustainability and the whole all of these parameters in mind. Also a very interesting fact is, if you look at these new manufacturing setups which have opened in these countries, you'll find them that they actually are very proud about this particular factor, and this is something that this is what brands are interested in as well. That not just on the cost sustainability side, they get a very strong thumbs up here. So I think that's a given here, that there is no doubt about it.
So I had this question in my mind that is, according to the McKinsey report, McKinsey has released a lot of reports. There was a report about Ethiopia. There was a report about the emerging markets. This is a question that I would like to ask both of you. It's that according to McKinsey report, the top three areas where the brands want to focus on are: first is end-to-end efficiency, second is supply chain flexibility, the third one is supplier collaboration and development. So we've discussed about the efficiency and supply chain point, right? So can you throw some light on the supplier chain collaboration point?
Supply chain coordination is a supplier and manufacturer. So supply and brand coordination is something which is a very new term to this industry, but it's picking up pace pretty quickly. Because what is happening is these brands want to offload a little of their costs to the manufacturers in terms of product development, all of that. Whereas vendors look from these brands for advice and direction in terms of both manufacturing excellence and also expansion in terms of diversification of products and destinations and so on and so forth. So I think this is a very interesting term, a very interesting trend, and I really hope that it actually settles into this industry, because then this would make a two-way street. Otherwise, this was always a brand dictates, manufacturer follow industry type thing, right? What do you think, Varun?
Anas, I have a different opinion here. So, in my perspective, what is happening in the brand sourcing pattern, what they are preferring nowadays is kind of an integrated supplier. They are not very keen to be a part of the business that they are not that is actually not their focus. For example, why would a brand be quite interested in knowing that the yarn from which supplier has come to which weaving mill, then to which processing unit, and then which to garment unit? Instead of what they are looking forward is a kind of an integrated supplier who claims that I have brought the cotton from that mill and I'm supplying you the garment of that same cotton. So it's a kind of an integrated player that they're looking forward to, rather than getting into the business of the entire supply chain, who is supplying what, whether it is being fully tracked or not. So people are looking for a kind of a solution, a full package provider who can guarantee the integrate of supply chain rather than the integration of supply chain. So that is what is happening. We can also see the business. If we look at this consolidation kind of a thing is happening across India, across the globe. Even if we look at back in India, IKEA at one point in time used to source from maybe hundred of suppliers. Today they are doing business only with limited 20, not even 20 suppliers. So the key here is that you give me a full package, you take guarantee of everything. It's not my business to get into the entire supply chain volumes. Of course, what happens is that when you are in initial phase of development of the country, for example, Ethiopia, the brands will have to be inevitably falling into that kind of thing that we have to track, we have to help vendors and all those things. But when the larger buyers are coming, so they are not quite keen on doing that. If Arvind is setting up shop in Ethiopia, then they will say, okay, fine, you are doing the same thing for us in India. Replicate the same thing for us in Ethiopia as well. So that is my take on the supplier chain integration that I think is happening.
I think we should start off with the question and answer round. Ankita Saxena asks, so what do you think where India fits? How we can safeguard Indian manufacturers?
First of all, it's an open trade. So first of all, we as a global entity, we can't safeguard our exporters. The only thing that government can do or industry can do is to produce competitively, ensure that there is a level playing field for all the things. You can't safeguard yourself from this competition. You have to compete, right?
Yeah.
If you are not able to finalize your free trade agreement with EU, and that advantage already is there with Bangladesh as well as Ethiopia. So I don't think there is a kind of a safeguard which is in place. On the other hand, industry also needs to, in India also the efficiencies are not that great. It is just that we are better than Ethiopia or other developing countries. So industry also has to invest in those directions, that it is not only whatever they are selling is not enough. They should be more competitive. It's on the day. So safeguarding etc. is a passe in this kind of a globalized world. We have to ensure that everything, whatever is being produced anywhere in the country, anywhere in the world, has to be competitive to the landed duty paid price has to be the most cost efficient. So that's the aim we should be targeting.
Anas, would you like to add anything?
Well, my first statement is going to be a diplomatic version of what Varun said. It's a global economy. It's a global market. I don't think protectionism is something that can help India. What India needs right now is to accept change in terms of technology and the digital intervention which the whole world is talking about. And more importantly, it has to find its, for example, if you look at India from top to bottom, we are manufacturing a huge variety of products where we might not benefit on the cost angle and across all of the products. Like, for example, when people talk about India being a lagging economy in terms of fashion industry, but then I go and look at manufacturers in Tirupur, I think they still have an upper edge when they talk about knitwear manufacturers, right? That probably could be a direction which India can look into. Which I would mean is, yes, we would actually need a lot of manufacturers to cover our own retail requirements. Yes, but in terms of exports, we need to start, consolidating our manufacturers into more refined and agile supply chains, which I think is actually the need of the hour for India. What do you think, Varun?
No, I think what you and I are saying are both the same things. So the question of safeguarding Indian manufacture doesn't arise. First of all, if you're talking of Indian domestic markets, then we can take some action. But again, that's a limited thing. In India is also signatory to WTO. Imagine the same thing start happening, which is going on. USA also start doing the same thing. China does the same thing. Europe does the same thing. So it's a kind of a trade balance thing, right? So when we are looking into the domestic market, if start, let's say, for example, a lot of things are happening that Bangladesh export into the country, into India is increasing at a rapid pace. So there something has to be done. Under SAFTA, India has allowed duty-free access to Bangladesh for its garments, and its garment exports are increasing day by day. So I think they're growing by in double digits on an annual basis. So there, the challenge is that while all free trade agreement was negotiated, we did not put a rule of origin clause, a strict rule of origin clause to the Bangladesh garments. So what is happening is that they're using Chinese fabric, converting into their country, and then they're supplying into India. So this is the problem that we have. Rather than safeguarding our interest, we under SAFTA our inclination was to help Bangladesh as a kind of a neighbor country. So we should be ensuring that at least the fabric from China should not be entering into the country. Either it's a fabric made in Bangladesh or fabric made in India, which is getting converted and coming back into the country. So this is the problem that we can look into. But safeguarding, increasing the import duty to a high level, I don't think it is a possibility anymore.
Okay. Thank you for your view on this. We should proceed to the next question. Mr. Harry asks that these new geographies should learn from Bangladesh. Bangladesh is buying technology and software at a rapid pace. This has allowed them to come up very quickly. Technology and software investments are very important. Can you guys address at this part?
Yes, he's right. Bangladesh has invested in a lot of technology in terms of both hard and soft sides of it. It has also invested into a lot of resources, a lot of money into consultancies, where it has actually tried to uplift its current skill levels and improve its operational efficiencies, which has, if you've seen the last couple of years, has started showing tremendous results. So I think, yes, that's a right line for the to also look at, because this is something where they can probably shorten the gap between efficiencies.
So Anas, actually the thing is right. What Harry has pointed out, it's a very important question, and I think we were just going to miss that entirely. This is one of the big challenges in Africa. Look at Kenya. Kenya is the largest exporter out of Africa, right? They are doing about $400 million of exports, etc. But the investments into technology and software is significantly lagging over there. Even in Ethiopia, if we talk about, they are bringing in investments from international people on a very proactive manner. But the focus on technology, automation, and software is not there. Now, there are two parts of it. First of all, you have to reach to a certain level in order to start adopting those kind of technologies and softwares. When you have a wage cost in the range of 40, 50, $60, you don't think too much about the automation level. First of all, the international investor who's coming, or they would like to first of all capitalize on the low cost manufacturing. The moment the wages start increasing, the efficiencies are hurting a bit, the low efficiencies are hurting a bit more, and then you start thinking about the softwares and technology, all these aspects. Same exactly. When what is happening in Bangladesh is again the cost of wages are going up, the compliance, etc., the cost, etc., everything is increasing. So that's why people are adopting technology and software at a very rapid pace. The pace at which Bangladesh is adopting the technology cannot happen in next 5 years for countries like Ethiopia or Bangladesh. It's the same thing. Like for example, if we look at Western world, so whatever manufacturing they are doing, it is highly automated. It is highly technology oriented. They're making technical textile. They're doing 3D printing, etc. So all technology and softwares are being used to a very low level. Some same thing is being adopted in Asia, and to a lesser level it is being adopted in Africa or the other emerging markets. So it's a very clear thing. If there is a necessity, then only people start adopting it. While the thing is that the question which is being asked is that they can learn from Bangladesh model, or they can learn from any other developed country, that what is the kind of automation. But eventually what will happen is that wherever there is an industrialization, there will be the wage growth will be there. You cannot just wish the wage cost away. It will always be there. You will have to have a kind of an investment into technologies, and even I would say that you have to invest in a large scale also, because ultimately economies of scale will take care, take some kind of a set of which you are coming. At least they can take the fixed cost into consideration if you're looking into the larger investments, whether it's a technology investment or anything else. You have to plan for a longer term future, but unfortunately nobody is doing as of now in this part of the world.
What I was talking about was, however, Ethiopia would need a lot of investment on not just the technology side, but also skill development, in terms of ensuring that the existing workforce that it has, the low-cost workforce that it has, can actually give it a return. Because right now, with the kind of efficiencies it's having, the kind of time and effort it takes and the cost it takes to make a garment, it's not that cheap anymore. just because of the fact that the efficiencies are so low. So yes, technology and skill development is something that they would seriously need to look at.
Yeah.
They are not looking at is a different question altogether, but we can be wishful, right? We can hope for a better future.
Yeah.
Okay, so let's move up to our last question. Mr. Ranjit asks that what are the second cutting edge advantages that has on the so-called emerging markets other than the low cost?
So see, I'll try to address in some manner. First of all, the key aspect, the key attraction is low cost only. Whether you want to believe it or not, everywhere, every single country which has started manufacturing garments and textiles has been a low cost destination. China was it, Romania was at one point in time was like that, only Turkey was that for Europe. So the industry will first of all migrate to capitalize on the low cost manufacturing destination only. That is the thing. The USPs etc is a secondary thing. When I say secondary thing is that it will eventually happen. It is not the first kind of a thing like, okay, I find Cyprus a very beautiful destination, let me start garment manufacturing over there. It will never happen. First of all, the company has to be low cost. Whether it is a low cost because of the factor costs which are prevailing in that country, or it's a duty free access to some market. So the package has to, the initial ingredient is having a low cost destination, and then you build a USP onto it. Let's say, for example, Sri Lanka is there. So Sri Lanka is, it's not a very low cost destination, but okay, fine. It's not a, in comparison to Western world, it is there. Now they have built up a kind of a USP, which is they're making very intricate garments and all those things, and plus somehow like garments without guilt. So this kind of USP etc comes into the second destination. When there is a lot of established basis, then okay, brand can choose, okay, let me go into this country or this country, this is going to be. But whenever new destination is emerging for garment, whether we would like to admit it or not, it has to be the low cost destination.
Exactly. Right now, the only reason we're looking at Ethiopia is low cost, right? There's nothing else to look at
It is.
over there. Because if it was
People,
near shore,
people are actually struggling to do a lot of things over there, so they can actually capitalize on low cost base. As Anas was saying, that the wages don't make a difference because the efficiency is so low. So that's why people are focusing on efficiency. They're not trying to make Ethiopia a very efficient country. They are trying to produce garments at a lower cost. That's the whole point. So whatever the factor costs are there, they are trying to capitalize to make really source the garment at a lowest cost. That's the whole point.
I don't think I have anything to add to that. You're bang on target there.
Yeah.
That's it. End of the day, that's all that they're looking for. How they can save a buck or two, perhaps.
Yeah, I guess that's what everyone is looking for. So I don't see any more questions on the board. So I think we should wind up this discussion. A big thanks to our experts, Mr. Anas and Mr. Varun, for giving out such good information for our audience. It was a pleasure to connect with you for the webinar. Thank you, Mr. Anas.
Thanks, Shivam. Thanks for giving us this opportunity. And thanks, Varun. Great having a chat with you face to face here.
Same here. Thank you so much. Thank you, Shivam.
Thank you,
Anas.
Thank you. Thank you, Mr. Varun, for your insight on the topic. I'm sure that the audience would have got enough information and we could have dig deeper on the topic. So I'm sure the audience would have got great insight. So audiences, if you missed any part of this webinar, a recording will be available on Stitch Diaries vlog channel as well as the Stitch Diary blog. It would be helpful if you provide your feedback for this webinar session and in the email that you'll receive. So thank you audiences, thank you our guests again, and we will be back with another webinar soon on a similar interesting topic. Thank you.